Right, good morning, everyone, on Wednesday, the 5th of July, as we head into today's European trading session. I'll flick across the headlines, we'll see what's going on, where China is in focus this morning, as China dampens the mood in markets a bit this morning off the back of some negative data, which further fuel fires of a global economic slowdown. Obviously, China being the second largest economy in the world, whatever goes on in that economy is obviously significant in terms of the global economy growth story. So that's really what's going on over the course of yesterday, over the course of yesterday evening and into this morning. Sorry, yesterday we obviously had Independence Day in the US, so markets closed for trading. Lack of liquidity, a lack of volume in markets yesterday, and no real clear cut moves over the course of yesterday. Nothing too much of note. So back into trading today, and today is a little bit of a Monday. We had Monday and Tuesday. Obviously, I mean, you have to imagine. I mean, obviously, I'm not American, so I wouldn't know too much, but I would have to imagine a lot of people would probably have taken Monday off, take Monday off and then off on Tuesday then as well. So get yourself a long weekend. So I would probably imagine there'd be a lot of market participants not involved over the course of Monday and Tuesday. Today then becomes a little bit of a Monday. So that's something to think about as we head into today's trading session. But really, China is the talk of the town across all these articles. They're just speaking about China and potential weakness for the global economy, and what that has sparked is a bit of downside across stock indexes. You can see US, European, Asia Pacific equity futures are all down. See, Brent is down slightly, crude is up slightly, so nothing too much to see there. But commodities pretty much across the board lower. You got yields in the US lower, you got US dollar higher, so a bit of safe haven trading when it comes to that. US equity futures, European equity futures, Asia Pacific equity futures all lower, US dollar higher across the board. Then come to the Australian dollar, which is down off the back of the Chinese data, which we'll get on to in a minute now once we get over to the economic calendar. Japanese yen continues to weaken. The medium-term trend is still bearish, regardless of what you think about intervention. Okay, they might intervene, but that doesn't change the fact that the currency is bearish at the moment. I haven't really seemed too interested in intervention around that 145 level. So the fact that they haven't stepped in and done anything now, I'm not so sure they'll intervene at 145. Probably 150. If it gets up towards 150, they'll probably look at more in terms of the way of intervention. So we'll keep an eye on that as it comes around to it. As we head on through the days, through the weeks, see if we can get up towards that 150 level. If we do get up towards 150 on dollar yen, that's where we'll pay a little bit more attention to any sort of intervention from the Bank of Japan. We flick across here and have a quick look at the economic calendar. We can see the services PMI across here this morning, lower than previous. There's forecast of 56.5, you can see here, so slightly below that, which is what markets are going off over the course of this morning. If I flick it down just to the low impact numbers and then come across to Wednesday, skip across to Thursday. You can see the composite PMI as well here, slightly lower than previous month, so dropping in relation to the previous month on both of these. Now this is still a number on 50, so it's not exactly all doom and gloom, but markets were expecting higher numbers than this, which shows that the markets are not increasing, or these sectors are not increasing the way that the markets had initially anticipated. So that's what they're putting downside down to this morning. But I mean, it's not exactly a terrible print, is it? I mean, it's still above 50, so I don't know if I really want to read into that too much over the course of this morning. I think it's kind of just putting a narrative towards price action. What can we find to go in line with that? It's still above 50, so it's not exactly the end of the world when it comes to that. But anyway, we'll let the markets do what the markets do. But you can see the S&P, you can see the Dow Jones, the Nasdaq and the Russell all chopping sideways. We had the DAX moving lower yesterday and has moved aggressively lower since Eurex open at 7 a.m. this morning. Has had some solid downside over the course of the last 45 minutes. So something to keep an eye on as we head into European trading today. FTSE, bit of downside as well since 7 o'clock. So These two stock indexes continue to be under pressure over the course of this morning's trade so far. That is then dragging, as you can see, the S&P, the Dow, the Nasdaq, and the Russell slightly lower. But for now, nothing really too severe in terms of US indices. But certainly these European indices are not enjoying themselves over the course of this morning. But I can't really see it being too economic calendar driven. I mean, you can see this now at 7:45, just out 2 seconds ago. Industrial production out of France slightly positive. I mean, it seems to be just one of those moves in line with interest rate hikes causing potential for the global economy to slow down. But in terms of fresh fundamental drivers, not really too much out in the way of markets this morning. You can see the Aussie dollar continues to grind higher. Kiwi dollar kind of chopping sideways. Aussie down a little bit over the course of yesterday, but Euro dollar relatively sideways. Cable sideways. Dollar Swiss, dollar CAD, dollar yen, dollar index, all relatively sideways. There's not a great deal really here to see across FX, and that's obviously what we're speaking about on Monday and Tuesday. Obviously being Monday being the day before Thanksgiving, Independence Day, day before Independence Day. Obviously a lot of bank holiday in the US yesterday causing decreased volatility in markets. You then look at bond markets, which are now back open for trading, which they were closed yesterday, continue to chop around that 385 level. These 2-year yield popped above this 480 level that we did look at last week, has now broken through. Hasn't really resulted in too much price action across asset classes, but you can see Aussie yen, you can see CAD yen pretty choppy. Gold is retraced back to this 1930 level that we've been looking at for a while, has managed to hold firm as of now. On a little shorter time frame, you can see a bit of a double top. If I just change the time frame, a bit of a double top off that 1930. So if you do get through there, that would suggest some potential for further downside, especially if that US dollar strength continues. Might be worth continuing that downtrend. And in gold, the ongoing interest rate hikes, as long as interest rate hikes continue and interest rate hikes remain strong, it's not an environment where gold is going to strengthen too much. Gold being a zero yielding asset, when interest rates are up 5%, above 5%, and then central banks talking about them continuing to rise, not exactly in an environment that is conducive to gold upside. Oil not doing too much, kind of pretty sideways in line with recent ranges. Still got that 67 level in focus, albeit up at 71 as of now. We did have some output cuts from a couple of countries, Saudi Arabia being one of them, but offset by struggles or expectations for global demand to struggle. So really nothing much to see there on oil at the moment, but keep an eye on that gold chart, keep an eye on those stock indexes, see what happens over the course of the day. Stock indexes look bearish, certainly European stock index is bearish yesterday. Does that have a negative handover into US indices today? Obviously we will have to see, but keep an eye on your indices, keep an eye on your gold. There will be charts and assets to keep an eye on over the course of today's trading session.